Hello, it's Dominique. I just wanted to spend a few minutes just talking about Tuesday's rate cut by the Reserve Bank. And I guess this economic reassessment that I've mentioned so many times recently, really over the last 12 to 18 months around economic conditions, global share markets being at record highs, and being very realistic about returns going forward. For many of us who have seen much higher levels of return in the last 6 and 12 months than what I personally would have expected, and certainly the performance of those clients of you who are out there that have active management of advice and I'm moving the funds around, and some we've had in there for a very long time, continue to be really proving to be best of breed through a variety of economic conditions. But I guess what I wanted to talk about is why the Reserve Bank cut rates. I know I've mentioned to many of you that the next expected movement wasn't up, it actually was down. And in reality, what that means is that the Australian economy is growing below 2%. Remembering that the Reserve Bank tries to keep inflation and the growth of the economy between 2 and 3%. And a year ago, we were kind of in the middle of that bracket, and now we've crept under. And that is contributed to by a weaker housing market, the fact that people are having to spend more on needs like electricity and utilities rather than wants and discretionary items. And at the same time, wages simply aren't growing. Wages in Australia, I know I've spoken to so many of you, has there been a pay rise this year? No, there hasn't. And that tends to be a fairly common response. So what does this mean? Well, it's great if you're one of my clients who has a mortgage, but as we've seen, most of the banks and lenders haven't fully passed on that full 0.25% rate cut. Again, I would encourage you to get in contact with Sandra. I'll make sure her email address is in the comments below if you want your mortgage to be looked after. She's now handling all of the mortgage broking in the business. And the reason for that, as I've mentioned previously, is that mortgage broking, financial planning, the level of compliance in both areas is just exponentially increased, and it's a much better advantage for you as a client to have a specialist in that area. So Sandra, I'll pop her email address below. If you have any questions relating to your current mortgage, interest rates, whether or not we've written that mortgage or whether you've independently done it, I genuinely encourage you to get in contact with Sandra, because now again we've had an interest rate move, potentially there's some changes to fixed rates, but more importantly, perhaps it's now an opportunity, particularly if you're with one of the major banks. Nearly across the board, Sandra is finding that smaller lenders are being far more effective. So if you've got a mortgage, great. If you don't and you're one of my clients in retirement, this is just another kick in the guts, really. We've been struggling to be able to find investments that are able to give us decent levels of return. We know that cash at the moment isn't a sensible place to keep any sort of money long term, and this rate cut is just another reason for us to have to go searching. But at the same time, it's not a reason for me as a financial advisor to just throw you into Australian shares, for instance, that now have imputation credits certain post this last federal election. So it really is a case of let's be sensible, let's maintain. I know sometimes I can be a little bit boring with this, but my job is to make sure that we ride the waves of investment markets in a sensible way, and that we're not trying to ride the highs because if we do, we're going to ride the lows as well. So if any of you have any questions, concerns, anything around investment markets, that your portfolios, please remember that you can book in your appointments at any time. And again, I'll put those links below if you need to. So for now, I just really wanted to say, be mindful. Rate cuts mean that the Australian economy isn't performing strongly, and we do just need to keep that in the back of our minds.